Welcome back to the channel, everyone. It's honestly hard to believe that the month of January is already almost over. It feels like it just started, and yet it came and went extremely fast. Now, the big question on everyone's mind is, what exactly is February going to bring? There are already a lot of suggestions and conversations circulating right now that February could be a very important month for the crypto market, and more specifically for Cardano. That's exactly what I want to talk about with you guys today, while also highlighting a few other key things that are currently happening across the Cardano ecosystem. Because this is one area where Cardano continues to dominate and quietly build strength while many people are distracted elsewhere. This content is for educational and informational purposes only. Nothing discussed in this video should be considered financial advice. Is not a financial advisor, and all investments involve risk. Always do your own research before making any investment decisions. So, let's get into it. There is a clip that has been circulating heavily right now on social media, especially on speaking during a live stream and saying that February is going to be something significant. This clip has been spreading very fast, and naturally a lot of people are getting extremely excited about it. However, as the Angry Crypto Show correctly pointed out, the original date of this clip is actually from January of 2025. So to be completely fair and accurate, when Charles Hoskinson made that statement, he was referring to February of 2025. And in hindsight, he wasn't wrong at all. February of 2025 ended up delivering two of the largest Black Swan type events in crypto history. We saw the Trump and Melania meme token phenomenon, and we also saw the setup for the Strategic Crypto Reserve, which was officially announced right at the start of March. Cardano and ADA benefited very aggressively from that announcement at the time, and the market reaction clearly reflected that. Now here's the important part. February of 2026 also has the potential to be significant, but it comes with both upside opportunities and possible risks. We know there is the potential for another government shutdown. There is still a lot of economic uncertainty globally, and all of those negative macro factors could absolutely resurface, just like they did back in February of 2025. That said, at the same time, Cardano is making very real and measurable progress. We are seeing continued development with Ouroboros Laos, the Midnight blockchain is getting closer and closer to deployment, and this is something that everyone really needs to keep in mind. Every single day that passes brings this ecosystem one step closer to a major push forward. We are one day closer to potential USDC and USDT integrations, one day closer to larger scale partnerships, and one day closer to the possibility of an ADA spot ETF going live in the United States. These are not small developments. These are massive catalysts that could easily enter the news cycle much sooner than most people expect, seemingly out of nowhere, and suddenly turn February into a very exciting month for Cardano. Another area where Cardano continues to dominate is social metrics, particularly social mentions. ADA continues to overshadow a large portion of the crypto market in terms of online discussion. When you compare ADA to assets like XRP, Litecoin, Chainlink, SUI, Solana, HBAR, and others, the data is very telling. For example, Solana currently has a larger market capitalization than ADA, yet ADA is still pulling significantly more social mentions, roughly 115,000 mentions compared to Solana's 82,000. That level of attention matters. It shows that Cardano remains at the center of discussion, and for anyone claiming that ADA is dead, that Cardano is fading away, or that no one cares anymore, the actual data tells a very different story. Right now, there are major discussions happening around Cardano and ADA, and the ecosystem in the limelight at what feels like a perfect moment in the market cycle. That being said, there are still people who either don't fully understand what's happening within the Cardano ecosystem or choose to cherry-pick data to fit a specific narrative. A good example of this is when you see headlines claiming something like "biggest loser of the last 90 days, down 87%, without any real context. When you actually look at what happened with the initial launch of the Night token, those early price levels did not reflect real market conditions. At launch, there was almost no liquidity in the pools. around $500 in trading volume, so prices were completely distorted. ADA Knight briefly traded around 10 cents before settling down to realistic liquidity levels closer to around 2 to 3 cents. When you look at the last 90 days with proper context, Knight is actually one of the better performing assets in the crypto market, well over 100%. That's a very different story than what the misleading headlines suggest, and it's why context always matters in this space. Importantly, Knight has become the most traded Cardano native asset despite launching just over a month ago. That is an extremely promising signal because it shows that interest is not fading and that traction within the Cardano ecosystem remains strong. Yes, the broader crypto market has been full of distractions lately, especially with the overall market run pulling attention toward larger, faster-moving assets. Some speculative traders who initially chased Knight may have rotated back into other assets, but at the same time, we are seeing the number of Knight holders steadily increase. That combination, strong volume and growing holders, is generally a very healthy sign, and right now, everything about it continues to look quite positive. Another major development worth noting is the recent statement from SEC Chair Paul Atkins, who said that it is now the right time to open the $12.5 trillion retirement market to crypto. This is potentially massive. If even a small allocation, say around 4%, were to move into crypto, we're talking about roughly $125 billion in fresh capital. Using the typical multiplier effect seen in crypto markets, that could translate into anywhere from $600 billion to over $1 trillion to the total crypto market capitalization. That kind of liquidity could easily put Cardano into motion, alongside many other top assets, especially if institutional managers begin seriously considering ADA due to its ongoing development, decentralization, and long-term roadmap. When you put all of this together, it really feels like we're in a period where a lot of people have been ignoring Cardano, ignoring the progress, ignoring the traction, and ignoring the fundamentals. And honestly, that to our benefit. While everyone else is distracted, opportunities to accumulate at prices that probably shouldn't exist are still present. Of course, we'd all love to see ADA move aggressively higher, but having time to position before the broader market fully wakes up is not something. That's all I've got for you guys today. If you found value in this breakdown, make sure to like the video, subscribe to the channel, and drop a comment down below with your thoughts on what February could bring for Cardano and the broader crypto market. See you all in the next one. Take care.